Hi, good evening, everybody.
Hi, everybody.
Ethan here from Investing Note. Good
Wow.
evening. Today we have a special guest. Of course, the veteran and the top tier remiser, Lee Guangshen himself. All right, just give us a few minutes before we start, as people are streaming in. All right. Just to give everybody a run through, right? Okay, this is part of Invest 360. The biggest market outlook event for the year. So this event is actually spanning over 4 days. So this is actually day 2, and for today's session, thank you for joining us when we have Guangshen here as a special guest. So okay, without further ado, Guangshen, time is yours.
Okay, thank you, Ethan. Yes. Hi, everyone. Today, I'll be talking on this topic. Let me do a screen share now. Investing in Asia under the new economy era. Okay? Just to give a brief update of myself. Actually,
Guangshen,
yes.
your screen is not sharing yet.
Huh? How come? Wait. Let me just try again. Thank you for updating. Wait. Okay, let's try it. Wait.
Okay, great. Okay, ready. Awesome.
Yeah, okay. So today our topic is investing in Asia, the new economy era. This is some of my profile. Actually, I appear on the Age magazine. I appear on TV. I also have radio appearance on 958 and 963 recently. I also have full cover story on Age magazine. And I have been taking part in a lot of competition, even recently, those investing no competition and ranked top 10. And also I have been placed second place in Yahoo Finance Gazillion Air trading competition in 2010, based on the investing methodology that I have, which is very simple, which I'm going to share with you all. I've been ranked number 1 in Investing Note, and I am currently a remiser at Phillip Securities. So I have been giving a lot of mentorship to a lot of brokers, financial advisors, all these on stocks. So as you can see, in 2010, correct, I did very well for the trading competition that actually was featured in the bus by Yahoo Finance. And I was placed 1 month advertisement on SBS Transit. And also I have been ranked number 1 for followers and reputation on Investing Note, as you can see as of current. So this is the disclaimer on what is going to be provided tonight. Yeah, feel free to later ask me any question. So today, the more important thing everybody wants to know is what are we going to invest, especially in Asia. But before we can even know what we are going to invest in Asia, correct, we need to know what is the current global financial climate. As of now, it is a low interest rate environment. And that is why recently, correct, on the last Friday on 958, I've been telling people that because of this low interest rate environment, a lot of retail investors have a lot of money in the bank, especially when those fixed deposits are due. So when all these fixed deposits are due, they realize that they do not want to roll over. They find the interest rate very, very low, some as low as 0.05%. For instance, for one of my charity unit, correct, I have a $1 million amount. I wanted to roll another 1 year. DBS only offer me 0.05%. But if I put in other banks, some may offer me even higher, like 0.3%, especially those foreign banks. But because of this low interest rate environment, the investors are forced to find something to invest that give them higher return. And that is why I actually suggest that they should buy into shares like the banks or those laggards like Singtel, which gives stable dividend. And after that, within less than 1 week, Singtel went up. Second thing, we need to know that there are a lot of stimulus from global central bank, especially from the Fed, from the Chinese government, from the Japan, and from the EU. With lots of money that's printed, basically asset prices will definitely have to go up. Now, the next most important thing is every crisis equals opportunity, and the global economy is recovering from COVID-19. But we cannot be waiting for COVID-19 to end, then we start to do our investment. Later, I'll be sharing with you all the chart, and you'll realize that usually stocks will move 6 months before the recovery, 3 to 6 months before the recovery. So what is the outlook for interest rate? It is very unlikely to have an increase in interest rate for the next 1 to 2 years because the global economy is very, very bad. So with very low interest rate, as we can see from the Fed, from CME Group, they already forecast that interest rate will stay very, very low, definitely below the 0.5 to 1%. So what are we going to invest? Especially those in Asia, they will be saying, we cannot be putting our money in the bank because the interest rate environment is so low. We want better return. You can even see Singapore interest rate itself. You see the SIBOR rate 2006 to present was supposed to go up. But because of this COVID-19, the central government and even Fed has to reduce interest rate. Why? If not, a lot of business will go bust. So we want to look at Asia. We need to look at the biggest economy. We need to look at US. What is the new thing that actually happened? Formerly, Trump win. But now we know one thing, Biden has become the president. And what happened is Democrat control the House and Senate. And because of that, correct, we need to know what is the in play now. So the in play for Biden itself, correct, the administration will definitely focus on number one, clean energy. So you have seen that in US, all the clean energy shares went up. So around the world, all the clean energy share also will go up. You look at infrastructure. Also, we know that they're going to focus on infrastructure. So we see building materials in Asia all start to go up, especially those commodities. Number three, when Biden was declared the president, what happened is everybody feared that they may raise tax. It is true that the fear will realize in the future. But as of now, some of the Democrats may resist raising tax. What is the reason? Because of COVID-19 affecting the global economy, especially the US. So for the short term wise, they may not raise tax. But in the long term wise or mid to long term, we expect that the Biden administration will most likely tax on the tech company. And that is why tech company may suddenly go down second half of the year because of the chance that Biden may decide to raise tax. And most importantly, why is the market so strong? It's because of the fact that global central bank, all of them are adding more and more stimulus to the financial market. So what happens when they print a lot of money? Basically, it causes inflation or asset prices will go up. It is also a foregone conclusion that everybody knows that the global economy is not doing well. You all ask yourself, most of you working for the government or working for private companies, most of us do not have a pay increment, number one. Number two, we also do not have bonus or less bonus as compared to previous year. So basically, with such bad economic climate, why are things going up, especially stock market, especially assets such as Bitcoin, crypto, gold? It's because of stimulus. So whenever I always explain to you is that every crisis equals to opportunity. And these are taught by my savvy investors who actually 80 to 90 years old already. In their lifetime, they always tell me there are only 4 to 5 crises. And these 4 to 5 crises along your lifetime always occur every 10 years. But this round, the last financial crisis was the Lehman crisis. So it took 12 to 13 years. So during this crisis, usually what are the things that they buy? They always tell me the stock market usually crash. And when the stock market crash, everybody are fearful. It's the time for you to do investment. And you must buy shares that can weather the storm. And what are the shares that can weather the storm in Asia? Always the banks will use banks to buy. Singapore has 3 major banks. We have DBS, we have OCBC, we have UOB. You buy all 3. So during the crisis, when was the share plunged most heavily? Slightly during the mid of March. So if you have invested in the banks, you will have a very good return. Second, stocks. What are the stocks that actually also people buy? The REITs, property. Everybody know during crisis, you buy into properties. After the crisis, the share price will go up. But a lot of us cannot afford properties. Am I right to say that or not? So what do we invest? We invest in REITs. If you invest in the REITs during those crisis period, especially like Capital Mall, Trust, all this, the price has already gone up significantly. There are people who invested Capital Mall, now called Capital Com Integrated Trust. And what happened is the price of it actually went up from $1.50+ to now $2.20. Now, when we want to buy good assets during the crash, we look at the fundamentals and we do not anyhow buy counters. For instance, what are the shares that we should try to avoid? The things that doesn't do well during COVID. And that is why those shares actually got hit very badly. Singtel, SPH, StarHub didn't perform well, or even Singpost didn't perform well during this crash. So when we want to buy, we must make sure that the shares that we buy have very good assets, and usually they can weather the storm. So the key thing we have to understand is crisis equals to opportunity. Regardless of where you are in Asia, you should always buy the major banks, especially the good banks. For instance, if you are in Malaysia, you should buy Public Bank. In Singapore, you just buy, if you want, you just buy into DBS Bank. As I mentioned in Chinese, wei, a time of danger, is also a time of opportunity for people. So there's always people say, what is cheap? This is what differ people from one another, meaning that how they do the investment. Meaning that some people may think that $18 DBS is cheap, but some may think that, oh, maybe at $15 is cheap. So this is your foresight. But usually during a crisis, if you buy while it's going down and average down, it will eventually go up fast. So some people cannot catch the bottom. So some people bought DBS at $21, it dropped to 19, they buy another 1,000 shares. And when it dropped to $18, they buy another 1,000 shares. So this is the key. Beauty is in the eye of the beholder. At the end of the day, regardless of what price you buy, after the crisis or during the recovery, all these shares will rebound. It's just the difference in how much you make. So in Asia, there are a lot of things that we can invest. So we know that this is the new economy. So during the new economy, what should we invest during the crisis? I always tell people, if you use what product and services correct, you should invest in it. Just like in Asia, recently we have been using what during the COVID period? We have been using Zoom. I have never used Zoom in my life until during the COVID. So during the COVID, what I decided to do is I suddenly use this new thing called Zoom. So I bought it at 100+. And after that, what happened? Within less than 1 year or a few months, Zoom went up to almost close to $500. Next, what are the things that I used during this period and the price also went up? I used DocuSign. I use it to go and do signature and sign for those documents. Again, the price appreciate in value. I use more Apple phone. How do I use more Apple phone? I use the App Store during this COVID-19 to buy more games, to play, to download more apps. Eventually, Apple also went up in value. So what are the other things that I did during this COVID-19? I do a lot of online shopping. So I use a lot of Shopee, so I buy SEA. I also use Alibaba. I also went to buy into Alibaba because of Taobao. And also, I also buy into other things that I got used. For instance, what are the things that I use more often? I use Facebook Live more often during the COVID. And Facebook also went up in value. So, in Asia, there are a lot of opportunity. Why? Because of crisis. A lot of people never realize this. Let me show you one thing. Every crisis, especially during a pandemic, before the pandemic ends, the share price will start to creep up. This is known as the recovery phase. You look at SARS, you look at after the H1N1 virus, the swine flu, all the shares actually go up in value. So during this period, it is just the recovery. So I believe that 2021, with so much stimulus, too much money that is flooded in the market, the stock market will do well in 2021. But as I said, you must buy shares that are having strength, meaning that what are the shares that are in play now? Basically, they are the tech shares that can weather this crisis. After that, then they have a rotational play. Then they go back to those traditional stocks. Next, as I mentioned, because there are too many stimulus, commodity prices will go up, oil will go up. Although during this COVID-19, the demand for oil actually decreased. What is the reason? Because of COVID, we use less oil. But as they print more money, when there are too much money that's printed, it causes what we call inflation. Inflation is too much money chasing too few goods. And when the OPEC or Saudi cut output, oil will go up. So as of now, for 2021, I expect commodity prices to go up. I also expect oil to creep up and hover above $45 for the rest of 2021. And I believe it will be between the range of $45 to $70. So you must remember that last year, oil crashed to even negative value. But oil itself is an asset that we use every day. So if y'all got drive car, y'all got do things using oil, I believe that oil itself during the recovery phase will slowly creep up. And when things go back to normal, oil prices will also go higher and higher. No doubt, Biden administration is going for clean energy. We won't see oil above $100 so soon, but eventually oil itself is still in demand. Global economy needs oil, unless they can find a substitute for oil. So this is the important things that I always learn about the sector rotation, and that's how I actually choose my stocks for Asia. So when the market is very bad, the first thing we should always buy the finance, the tech. So what are the things that we look at? We look at the banks. Like during March, when the things are very bad, I buy into the banks. I also buy into tech. I buy into Zoom, I buy into SCA, I buy into AEM, I buy into UMS, all these that belongs to the tech sector. I also buy into venture. So as the market starts to go higher and higher, it moves towards now we know as the bull market. The tech is still in play, and that's why you can see shares like DocuSign is still continue to creep up. But now basic material, and that's why we have seen shares like Avaga, all these all start to move up. Okay, the next thing you need to buy, you have to buy into the oil sector. You need to buy into Capricorn. You need to buy into ExxonMobil. You need to buy all this. And that is why all this will start to move higher. And then after that, we move into the healthcare. And then last part, we move into the utilities. So it's a rotational sector play. So during this period in Asia, correct, you can see all the stocks are starting to creep up. Remember that just now I mentioned the SPH is a laggard. Singtel is also a laggard. But now it's starting to go up because we are entering a bull market. Everything is going higher because too much money is being printed. And they go into the financial system. When there's just too much money, as I mentioned again, asset prices will go up. You can see now that Bitcoin, Ethereum, all go up very, very high. If you have invested in Bitcoin last year, you could have from the bottom make 10 times, which I did. But it is a very dangerous commodity. Why? Because you cannot see Bitcoin. But the reason why I invested in Bitcoin, as I mentioned, I believe my philosophy is very simple. If I got used the product or services, I will buy into that asset class. So basically, crypto.com, you can use the Bitcoin to actually spend. And when I spend, I decided, maybe I invest maybe 5,000 into it. It becomes 50,000. So let me give a summary of the things that you all have to think what to invest. So overall, the Asia economy is currently, to me, is strong. Why is it strong? Because economic data points to a global economic recovery. You all can see all the share prices are going up. Industrial production slowdown appeared to have bottomed based in the US, and the US Purchasing Manager Index has turned up strongly. The rollout of vaccine will aid in the recovery in 2021, which will help Asia emerging market. But do note, things are not so smooth. Why? Because some of the vaccine, when you roll out, correct, like now recently there's a mutation, it's not so simple. And also to push out all these vaccine to all the emerging markets, especially all those like Indonesia, Thailand, Vietnam, Philippines, it is not so easy. So it takes time for things to get back to normal. So during this period, during this transition, the new economy shares and the tech shares will still continue to go up. That is my view. So the second thing, as I mentioned, from the Biden administration, you need to understand what he pushed for. Democrat definitely will push for additional stimulus. And when you have additional stimulus, correct, you will definitely cause asset prices to go up. Why is Biden able to push out more stimulus? Because as of now, the Democratic government has already controlled them, the House and the Senate. And he will definitely push for more stimulus packages. So more stimulus packages will cause US dollar to come down, stock market to go up, asset prices to go up. And that is why my view itself, assuming that the government, global government, do not clamp down on cryptos, cryptos should go up in value because there are just too much money in the financial system. Other central banks in Asia, like Japan and China, may also push up more stimulus to help their own economy affected by COVID-19. And that is why you can see Tokyo stocks going higher and higher, and China is going higher and higher. And I believe this too, this year, most likely the stock market may break new high. Now, we have to understand inflation. Inflation already starting to creep up and it's already above the 2%. Why is this so? Because there's just too much money printed. Usually, inflation shouldn't occur when to go up in value because everybody is got money. So this result in what? Uptick in commodity prices, uptick in oil prices, and also uptick in crypto prices such as Bitcoin and Ethereum. And going forward, if they are going to print more money, that means you have seen more stimulus packages being coming out from the Biden administration or from other central banks. Do expect all these to go up. And if all these go up, what will happen is commodity shares in Asia, oil-related shares in Asia, and also crypto-related shares will also go up. But crypto is not so easy to foresee because it's a high-risk instrument where a lot of government want to clamp down on crypto because it's not easy to administer anti-money laundering. And because of that, correct, so you have fluctuations. But as of now, if nothing changed, all these commodity prices, oil, crypto, and eventually even gold may rise. So do note, inflation happens when there are too much money chasing too few goods. That is the basic economic principle. So now the money that is printed by the stimulus are not needed. Do you ask yourself this simple question? Do we need trillions and trillions of dollars in a normal economy? No. But now the government fear that the whole economy, global economy may collapse. So they just print a lot of money just to prevent it from collapsing. So when COVID-19 subsides, Asia will recover. And when Asia recovers, they are flooded with cash. Round the world, all the cash are moving around the financial system. And too much money chased all these assets. What will happen? The prices go up. And that's why a lot of people, investors, especially retail, all scratch it. Hey, my business is actually doing very badly. Why are the stock prices go up? I cannot buy shares. My salary is not increasing. I have no bonus. All my business are very badly affected. Stock market should crash. Property market should crash. By right, if the global central bank didn't push out so much stimulus, what your analysis that the market will crash, asset prices will crash, I totally agree. But unfortunately, things have changed. We are in a new economy era. There are just too much money in the financial system. So when there are just too much money in the financial system, from the counterparty thread that I actually share with everyone, I can see a lot of funds movement actually coming into even Singapore, which is considered a weak market. Also, we do have funds, correct, trying to step up bargains such as hotels, commercial buildings, because they themselves firmly believe that after COVID-19, things will recover. And they believe that now is a time where people are desperate, they sell, they buy, they will make handsome profit. Next, we know that interest rate is really unlikely to fall further already because things are starting to improve. So when things improve, there's no need to cut rate. US no need to go into negative interest rate. And that is why the 10-year treasury yields has risen above 1%. There's something a lot of people didn't know is that when 10 years treasury yields start to go up, we must buy into the bank because the banks start to benefit from the rise in the 10-year treasury yield. So we are projecting that the 10-year treasury yield may hit 1.5% by the third quarter of this year, 2021. And if we continue to rise the 10-year treasury yield, the bank share prices will definitely creep up. It is very highly correlated that the 10-year treasury yield, as it goes up in value, in percentage, the bank shares will go up because they benefit from the increase. Fed will definitely keep the short-term rate low due to COVID. It is very unlikely they dare to go and increase the interest rate as of now because as of now, the economy is still very bad. It is being supported by what? By the flush of those stimulus package, those cash payout check by the governments. So the important thing you need to understand about the 10-year treasury yield is as it starts to rebound, the banks tend to benefit. And that is why recently the funds are even buying banks in Asia, and all the banks in Asia all start to rise up. So what do you understand about the 10-year treasury yield? It actually signals that investor confidence is high when it's rising. When do note that if you have 10-year treasury is how to say 10 years treasury use is low, correct? It means that the investor confidence are low. So do note that higher rates and a steeper yield curve will be good for the bank, but will hurt growth stocks that rely on that. So going forward, correct, as the 10-year treasury start to go higher, be careful of those companies that are highly geared, because they may not be able to pay their debts because they take their cheap interest rate to actually do expansion, and they will be hurt very badly, especially those REITs. Second things that you have to be very careful is those companies that actually use the low interest rate environment to borrow from the bank to actually do share buyback will also not perform well. Next, currently a lot of people are scratching their head. Since there are so much stimulus, why is it that gold is not breaking new high? Bitcoin is breaking new high, Ethereum is breaking new high. By right, gold should be going up as well, because everybody said when the Fed keep printing money last time, we should buy into gold. But gold itself is different from last time because of the fact that there is an alternative, and a lot of money actually went into the Bitcoin and dropped from selling gold. Number one, there is rising inflation, which I already explained. And as a result of this recovery of this COVID-19 and the rising inflation, people are not buying gold but selling instead. This is something based on economic principle. So let me explain to you what is my view on China. China itself, I'm bullish on China because it's growing. It's heavily centered towards the new economy. And basically, we can see that all the technology is doing well during this COVID-19. You can see shares like Tencent, Meituan, all these all are doing very well. And also, we know that Biden is different from Trump. He's not going to be so confrontational with China, but he is very cautious about the upcoming of China becoming a threat to US. But overall, this is my view. A Biden victory means for China is number one, they will adopt a more predictable and multilateral economic and financial China strategy. So going forward, we don't have things that will flip-flop the market, just like Trump always like to create volatility. Suddenly he said something negative, the market go down, then rebound again. For Biden itself, he will not use sanctions, he will not use tariff, and then label China as a currency manipulator, all this. But he will do more things like trying to talk to China, saying that they do wrongly, and then they will go to all these meetings. So you will have more predictable market. As you can see, the market is quite stable as of now since Biden has declared victory and the market has been going up. Okay, number two, probable less volatile trade policy on China, resulting in tax relief on China tech companies. So basically, he's not going to attack China as often as Trump. And also, he may not attack the tech companies. Like suddenly, Trump will attack TikTok, but I don't think Biden will do that. Biden is more logical. He will do things that is good for the US citizens and for the country. But he will not try to create volatility for the sake of creating volatility. Number three, I personally believe with Biden character, correct, there will be improved relationship between US and China for the next 5 years. But do note, things cannot be rosy because China is upcoming super powerhouse. So basically, China is a threat. So some of the policies and some of the Democrats will definitely try to make sure that they cannot do things, everything that will favor China. They will try to make US strong and protect US interests as far as possible. So the more important thing you have to look at China as a overall picture, as you can see, as I mentioned, if you can understand during the pandemic period, all the shares usually during the recovery will start to creep higher, creep to recent high, and then after that, you will break new high. This is the trend of the fact that there are just too much money printed in the global financial system. China itself, you see, is going higher. It is going to break new high soon. That is my view. Okay, China, again, for Shanghai A, all looks the same. So now China new economy is all on all these WeChat, all these on Weibo, QQ, all these are doing well. And also we can see that a lot of people, especially the retailers, all these are using more online banking, doing online financial system. So basically, if Ant Financial has listed, and if Alibaba, Jack Ma didn't offend CCP, actually Ant Financial is a good share to invest. Unfortunately, because Ant Financial is viewed as a threat by China government, it may break Alibaba up and curb Ant Financial strength going forward. So because of that, we don't know what is Ant Financial going to be. But in my view, actually Alibaba is a share that is worth more than $300. But because of the fact that they offended, Jack Ma offended CCP, so we will only be able to invest in Alibaba is to look at whether number one, Ant Financial is going to be listed again. If Ant Financial is going to be listed again, I may invest in Alibaba again. Number two, if Jack Ma appear again, it means he has resolved some of the issue with the CCP government. As of now, we can see he has disappeared from the public view. So basically, things have not been resolved. So for me, if people want to invest in Alibaba, we'll have to look at number one, when is Ant Financial going to release back? Number two, when are we going to see Jack Ma again? Number three, we can see a lot of third-party payment like WeChat, the Alipay, all these, they are doing very well. So this is going to be the future. I believe that those third-party payment using those mobile phone is going to be the next in thing. And also delivery business, all this is also doing well, especially a lot of people order things online. So these are the shares that we should consider, especially in Asia. So in Hong Kong, correct, there are a lot of shares that you can invest because asset prices will go up. I believe property will go up. I believe all these tax company or even the stock exchange of Hong Kong will also go up in value. And my personal opinion is very simple. If you want to know how to invest, always ask yourself this simple question. When do you started to use WeChat? When do you started to use Facebook? When do you started to buy use Apple iPhone? Or when do you use the online platform that you use now, like Shopee? When do you use DocuSign? When do you use Zoom? This are the period, is the moment you use the product and services and you like it, you trace back to the share value. I am pretty sure that the share price will go up. So there are no need to learn a lot of complicated things like study on deep fundamentals or study on technicals. To invest in Asia, we are very simple. How I make my money is very simple. If I got use the product and services, I believe that product and services is good, I invest in the share, I make money. And if I continue to use it, I will buy more of the shares. I give you one example. When I suddenly recently I have 4 accounts for Zoom, but I realized that I have too many accounts of Zoom. So I actually sold, I already canceled 3 of the accounts and left with 1 Zoom account. So I sold Zoom at 500 plus. And after that, what happened? Zoom came down in value. Give you another simple example. Last time I always read SPH newspaper. And SPH newspaper, correct, I believe that it give SPH give a very stable dividend. But I realized that online, wow, so much things to read. So I canceled the newspaper, I sold SPH shares, and the share price came down. So isn't that simple that if you stop using the product and services means something is wrong or things is not as good, then you just sell the shares. So you can see from the SARS period, again, you can see even before the SARS really end, what happened? The shares already start to go up. And after the SARS period, it goes higher. So that is why I'm very confident that with so much stimulus and after the COVID-19 pandemic, the stock market will continue to go higher. We look at SARS, look at Hong Kong shares, that's what actually happened. And history, I believe, will repeat itself. Except that this time, more money is being printed, especially during this COVID-19 because it dragged too long already. And because of this, the share prices will continue to creep higher and higher for the next 1 to 2 years, but at least for the next 1 year. You can see Hong Kong itself. Hong Kong itself, correct, it is also going higher, but it haven't break the recent new high because of what? Problems, riots, and everything. But I always believe that if Hong Kong itself, correct, start to rebound, correct, we can buy shares at Hong Kong land. Look at the net tangible assets of Hong Kong land itself that's listed in Singapore. It's basically $15 to $16 USD. It's traded very cheap. People are expecting that Hong Kong property will crash. they divided by 2 and divided by 2, and that's why Hong Kong land come down in value. But recently, as I said, the market is going up. We have to buy the laggards. The real value is Hong Kong land has a value. If they can sell all their properties itself and break up, they will easily collect back at least $13 to $14. So Hong Kong itself is slowly creeping up because things are improving. So after COVID-19, a lot of shares in Hong Kong, I believe, that are hit by this pandemic will rebound. Indonesia also the same thing. It's very, very badly hit by this COVID-19 because it's spread like wildfire. But the problem is Indonesia is also recovering. So after this vaccine roll out, if things start to get big under control, I believe Indonesia shares should also go up. Same for Malaysia, Thailand, Vietnam, across all Asia. So I just named a few of these countries. Now, for Singapore, a lot of people always want to know, because we are in Singapore, we want to invest in Singapore. What is the main reason? Because when we invest in overseas shares, although Singapore is not as vibrant as US example, but our currency and we eat, we spend all is in Sing dollar. So some of them say, I want to invest in Singapore. And it's true, it's good to invest in the banks that give dividends, invest in Singtel, invest in the REITs, because at the end of the day, you collect those yield, those dividends yield. But you have to understand that for Singapore, some of the shares that I always tell people, even before this COVID-19, is there is this digital disruption. So these are the shares that cannot invest unless things start to improve or they start to change. You can see nowadays, even before this COVID-19, I actually gave this slide before the COVID-19. I told people, a lot of people nowadays going forward, correct, will be using RedMart. But because of this COVID-19, it pushed people to use RedMart, use online delivery, use online shopping on grocery. You can see things happen. Same. Last time, I actually don't watch Netflix. But about 2 years ago, I decided to subscribe Netflix. I used, the share price also went up. Last time, from young, I always like to watch video. I like to go and borrow videotape, CD. This is my habit. But now what I do, everything I do online streaming. I go and subscribe to Netflix, all the different distributor. And what happened? All these rental shop all collapse one by one. You don't see all these rental business already, especially those TVB shops where they have this Hong Kong drama. So these are disruption. Number 3, last time you see taxi itself, a lot of people take taxi. But then when you realize that you're starting to take more and more Grab, Uber, all this during that period, right? Then what happened? Comfort prices also come down in value. So you have to take into account. But ComfortDelGro, I believe, has started to change, adopt technology, and people are starting to book on their apps. So because of this, I believe ComfortDelGro will slowly rebound again. So any company adopt new technology and change for the better, even during this digital disruption phase, I believe will come back stronger. Telecommunication. It is always no-brainer that actually telecoms company will definitely go down in value. You ask yourself this simple question. Last time I have a few lines, I pay a lot of money to the telcos. I pay few $100s or even in thousands. But when TPG came, free, they give me about 1 year of free data, unlimited, for 2 lines. I canceled 2 of my data lines. And because of that, immediately I sell StarHub. I went to sell Singtel. And what actually happened to the share price? It came down in value. And that's why Singtel keep melting together with StarHub. But going forward, again, we look at this. I believe that they are going to adopt the new economy era. They're going to adopt the changes. So they will rebound. But the rebound will not be so strong because to run a telecommunication, the network, the infrastructure, especially you want to change to 5G, it needs a lot of money. And that's why telecommunication company move slower, especially during the rebound. But basically, long run, when things all set up, I believe that our counters such as Singtel will go up in value. Second thing, a lot of people ask me, Singtel actually got the digital bank license together with Grab. What is my view on it? My view on Singtel is very simple. I believe that on the day itself, next time, I will definitely use Singtel and Grab digital bank services because I believe because of the fact that they will offer higher interest, because of the fact that they don't have much rental, so their business will grow. Number 2, the Grab itself have all this data, analytics where they will know our spending, just like what Alibaba is doing now. So with all this data, they know how much to lend you, how much to spend. So basically, when they partner with Singtel, it's a win-win situation. And I believe in the near future, Singtel will go above $3. So in conclusion, what do these companies have in common? SPH, SingPost, M1, ComfortDelGro, all are hit by this digital disruption, are also hit by this COVID-19 pandemic. And these shares actually got hit so badly that the shares didn't go up. The banks went up first, they are still melting. Only recently, the laggards all start to go up one by one, like Singtel, SPH, and SingPost. So what are the sectors to avoid? As of now, the sectors to avoid, for me, correct, will be the airlines-related industry, especially SIA. I am not saying that SIA will not go up in value in the future, but it went down because of the fact that they are burning cash now. So for me, again, it's very simple. If I want to invest in SIA, SIA must fly. I must be able to book the flight to other countries, and I must be willing to travel. If not, for me, SIA itself has high risk. I don't know how long they need to burn their cash. They are issuing a lot of bonds. Basically, how long do they need to recover? How much money do they need to borrow from the bond market before they will be able to turn this around? And all this money that they borrow need to repay. And can airline make so much money to pay off all their debt so fast? I do not think so. Okay? So what are the sectors that I believe can buy? I believe that the banks, DBS, OCBC, UOB can go up. The reason is very simple. I believe the 10-year treasury yields itself will go to 1.5% maybe in the third quarter. As 10-year treasury yields rise, what will happen is the bank price will go up. Number two, among these three banks, among the DBS, OCBC, UOB, why is it DBS is the strongest? In my personal opinion, they basically have the government backing. If there's any right issues or any major corporate action, you will definitely go to DBS. Number two, they are going to form a crypto exchange. With this crypto exchange that is for the high net worth, I can safely say that they are going to make a lot of money from this crypto exchange. Because like I asked a lot of people, especially those high net worth and funds, they want to have somewhere that is safe to park their money. Now a lot of high net worth bought cryptos in all those exchange like Binance, all those, but they will be more comfortable if DBS itself had its own crypto exchange and they will park the money there. And with that, DBS has more room to profits to make in the near future. For telco itself, we can see that things already is very, very bad. But I believe that Singtel and StarHub is adopting the new technology to go towards the new economy era. Just like Singtel, it has already partnered Grab. They got the digital bank license. So going forward, correct, and also StarHub will have digital online payment, all this. I believe that going forward, for the next few years, correct, they will change their business model and use more online tech, correct, to make more money. Number three, oil and gas sector. I believe that with so much stimulus, oil prices will start to go up. And I believe this sector, you want to buy, you buy the strongest. You do not buy counters like last time you buy into Ezion, all those, because anytime all these companies can go bust. If you want to buy, you buy Keppel Corp, you buy Sembcorp. Will I buy Sembmarine? Answer is not necessary. It's a high risk, high return company because it's purely on the oil play. But you do not forget that Sembcorp went up after they removed this supposedly lemon, Sembmarine from the portfolio. And Sembcorp went up almost close to double. Sembmarine went down instead. So the problem is with Sembmarine. For Sembmarine to go up, it needs oil prices to go up, and that's why recently it rebound. But in the near future, do you expect oil to go up? If you expect oil to go up maybe to 70, 80 level, then maybe you can buy into the pure oil play, you can buy into Sembmarine. So in conclusion, a lot of people ask another question is, what is it for me to invest, especially in Asia or in any shares? For me, the most important thing is to make money. And you must understand the philosophy. This is the new economy era. Sometimes people buy on hope and future. So to me, Tesla itself, she say, yeah, it's such a lousy company. I don't even use the car. I don't even understand about the thing. But basically, some people believe in the innovation. They believe in the future. There are things that you cannot count the value, the future value. So the price go up. As of now, they can make money. it is a good share. That is why it went into S&P 500. But in the future, will it still be a good share? Nobody knows. Just like last time, SPH is a blue chip. But during this digital disruption, SPH become a rubbish company. Why is this so? Because the price keep coming down. They cannot keep up with time. So a share, the most important thing is it must do well. Like what Deng Xiaoping said, black cat or white cat, it is a good cat that catches the mice that's most important. So what do we look out for when investing? Always remember this. That's why my advice today, the talk is, money is hard to earn, easy to lose. Every cent count. So you have to go and invest in things that you understand. There are a lot of ways to do a lot of investment. But for me, I want y'all to invest so that y'all can make money. Asia has a lot of opportunity. This is a crisis. A lot of shares are at the bottom. If you use the product and services, just buy the shares. Just like I have Singtel, because the reason why I recently, when Singtel at the bottom, I buy, because I'm using Singtel Line. So you want to buy the shares, it is safer for you to buy shares that you use the product and service. If you do not use the product and services, sometimes you buy, you do not have the confidence. And it has been proven time and time again. If you use the product and services, you buy the share, you cannot go that wrong. Like the banks, I have DBS account, I have UOB account, I have OCBC account. So the 3 shares, all I have. Eventually, I still make money. Number 2, do not invest in things that you don't use or believe. Assuming you don't use this certain product and service, just like Ezio, I don't even know what type of oil product or they are doing. So I don't invest in it. And also, if some people don't say, there are some things that I cannot use, sometimes I cannot even afford Tesla thing. So you ask yourself, do you believe in Tesla? If you believe in Tesla, you invest in Tesla. That is your foresight. But if you don't use and you don't believe, don't invest. Don't listen to people saying these rumors, that rumors, I buy shares. Eventually, how many people have lost their life savings investing in rubbish? Because they don't even understand the share. Sometimes they invest at this counter ABC. Then they ask themselves, hey, how come the ACC crash? Can I get back my money? Will it rebound back to the original price? How I know? I also don't know. Then they ask me, what should I do with the share? I cannot ask people to sell the shares. Neither would I want to go and invest in the share, even if it dropped maybe 90%, because I, number one, don't use the product. I don't believe in it. So I tell them that I can't help. Same for them. In the first place, I just correct their mistake. It's better for them to invest in things that they use or they believe so that they will not lose their hard-earned money. Number 3, focus on instruments that pays out dividend and yield. Always remember, like some people who actually invest in properties in 1996, then suddenly the property crash. But they at least can collect the rental income. That's what people taught me. So only in 2007, after 11 years, the property prices go higher. Same thing, if you invest in Singtel maybe at 270 and recently it crashed to $2, do not be disheartened. Why? Because you got dividend. You believe in it, you use the product and services. I believe you will go back up in value, which really if you rebound back from $2 to 250 something now. So, and also you also give dividend and yield as a backup. So always focus on instruments that pay dividends and yield. So today, the whole summary is Asia has a lot of opportunity. The stock market recently due to COVID-19 has caused a lot of shares to be at the bottom and they are just picking, and this is the recovery stage. So I'm teaching you how to select your stocks. So in conclusion, with what I have been taught today, it is never too late to be who you might have been. Okay? So is there any questions? So I will be answering all the questions that you all have in there. Okay? Yes, let me see all the questions. Yep. So number 1, let me see the question. I have 5 questions. You are saying that funds are recently buying back into banks. How recent do you mean? They have been buying in the beginning of November. I've been sharing in my under investing note under my counterparty thread, where actually I have this mechanism where I have a lot of clients trades every day. So I'm using what we call like the sample pool. I give you an example how I use this methodology. And it's quite accurate. SGX data that provides the fund flow is usually delayed. By the time that one whole week ends, then they give you a summary. But I have so many clients, and every day when the bank shares go up in value, my clients sell the bank shares, I hit funds code. It cannot be all of them so sway or so lucky that they keep hitting the fund code. It means that out of every 10 trade, 8 trade or 9 trade actually hit fund code. It means funds are buying. And what are fund code? Are those brokerages that you cannot open account easily, like Morgan Stanley, Macquarie, Merrill Lynch, UBS, JP Morgan, Credit Suisse, HSBC. Although some of them has retail, but some of them also only serve the high net worth. So if you keep hitting all these counterparty codes that are the fund code, which I said, it means that the funds are buying in value. And it started the moment during the period where Biden win the presidency. That means the funds actually favors that the market is rebounding. And they bought even more during the December period. And that is why I know the banks, the funds are buying in value. And I have data to back it up by the SGX fund flow data. So now let me give a summary of this, how you use it again. Assuming you have a ballot box, just like those political situation during our election, you take the box itself, you take randomly from every box, maybe 10 of it. In this box, 6 choose opposition, 4 choose maybe of the PAP. It means that very likely the opposition may win. Or the other way around, if 7 of these votes in each box correct, on average correct votes PAP and 3 vote opposition, means that very likely you will be PAP winning this constituency. Similarly, if I have a lot of trades and out of every 10 trades, 8 trades are funds buying, 2 trades are retail buying. So obviously I will be seeing that the funds are moving, are buying, and I can see it's an upward trend. But if let's make it, the retails are buying and every 10 trades, maybe 6, 7, 8 trades are the funds selling. It means market is coming down. Funds are taking profit and exiting. Okay, let me see the next question. Is now still a good time to buy in bank stocks considering the prices have risen a lot? My view is very simple. I'm still bullish in banks because of the fact that number one, the funds do not buy just for such a short term, maybe 1 to 2 months. They bought heavily during December and January. And I look at the 10-year treasury yield curve, basically it's likely to move above 1.5%. And because of that, I believe the banks will break new high this year. Everybody is saying that STI this year very likely to hit 3,002, 3,003. I have been asking myself, what are the shares that is going to cause STI to break this level? It's likely to be the bank shares, it's likely to be Wilmar, and also I believe the Jardine group of companies will also go up, like JSH, Jardine, CNC, all this. So my view is overall bank itself, although they have rebound, but they are more likely to break new high, assuming that my analysis that this year is going to be a bull market. Okay, let's see the next question. What are the views on SG ETF, Singapore ETF? All the ETF itself is good for you to invest in long term, meaning that if you do not know how to invest, my view is you just invest in STI ETF. Basically, it should give you a returns of 5 to 20% depending how the market performed this year. Because they buy a basket of shares, some correct, some wrong, but overall, if STI goes up, you will make money. So Singapore ETF itself is okay to invest. And also, you do not forget that all these ETF are part in your CDP. So directly handle all the dividend, all this will be paid by them. So I am happy to say that you should invest in ETF. Singapore one, not too bad. Okay, let's see the next question. What do you think of Singapore bond and REITs? Singapore bonds, I believe, and REITs are good to invest. As of now, it's still low interest rate environment. And for the next 1 to 2 years, I believe these are good instruments to hold, especially during low interest rate environment. And that is why REITs have been creeping up higher and higher. As long as there's more stimulus going forward, correct, I believe the REITs prices will go up because they are just too much money and the funds need to buy something and they will buy into the REITs. What do you think of SIA? Again, as I mentioned, the SIA itself, I did buy the time during the right issue. I did give a talk. I bought the right shares at only 40 over cents. I top up $3. It's $3.40. I sold at $4.30 something. But as of now, I'm not so keen on SIAs because they are borrowing a lot of money through bonds. And also they are burning a lot of cash. And I cannot see how are they going to make money. And as long as I cannot see how they're going to make money, right, I am not so comfortable to invest in SIA. Okay, So any more question? Yes. Any more questions that you all want to ask? Let me see. Let me see. If not, I hand back to Ethan.
All right. Thanks, Guang Shen, for the insightful presentation. I think there's a lot to be learned from your presentation. So, of course, in the interest of time, we only left like 5 minutes. So, thank you everybody for joining us for this special session with Guang Shen. So, if you'd like to know more, right, please go to Investing Note, and you can talk to him there on a daily basis, right? He's always there, right?
Yes.
So okay, don't forget to watch the replay if you miss some section and come in late. At the same time, we're gonna have more sessions from now all the way till Saturday. All right. So thanks, Guang Shen, and thank you everybody for tuning in. All right. Thank you.
Thank you. Thanks, everyone.
Bye bye.
Bye.